Hi guys, thanks for joining us today. Today we're joined by Simon Bedard and excited for him to share a little bit about his story and his journey and his perspective with us. Simon, without further ado, do you want to give a brief introduction to the audience?
Yeah, cool. Thanks, Liam. And first of all, thanks for having me on the show. It's nice to be here, and I think what you're doing with your podcast is addressing a really fundamental issue for so many people out there. So well done on the show, mate. I think it's really cool. Um, so yeah, look, I'll give you the abridged version. My wife and I are co-founders of a business called Exit Advisory Group. We do two fundamental things. We help business owners ultimately plan and execute their exit in the best possible way, and that means either selling their business. And let's be honest, there's 100 different ways you can slice and dice a sale, but also a lot of help, which is the advisory part around thinking about exits. How do you actually plan for an exit in your business? We are all going to exit our businesses one day, whether we like it or not. So I guess our message is you should think about that and plan for that, because it could actually be one of the biggest events of your life, and probably one of the greatest liquidity events in your life. Um, it really is something you need to consider. And I guess my view, like most things in life, is that if you put a bit of structure around that, you'll tend to come up with some better solutions. So that's kind of what we do now. How did we get here? Look, I've had a background in banking and finance and all that sort of stuff, but I won't bore people with all that detail today.
That's funny. Did anything in the entrepreneurial space that dovetailed with that banking, or was it just banking and
Yeah,
M&A and straight to I'm going to teach people how to do this?
yeah, that's actually a good question. So when I was working in institutional banking, I worked with high net worth individuals. So I very much was on the investment side of things. I worked on the trading floor at one of the biggest banks here in Australia. So there's 400 odd people and lots of screens and lots of activity, and it had a real buzz to it, right? But I kind of sat in this interesting role where I looked after clients who had substantial amounts of money to invest, and I would kind of work with the traders and sort of translate trader talk into real English for real humans. And so talk to clients about what they're trying to do, how they want to invest, what do you do with these parcels of money, and how do you sort of diversify, and what are some of those sort of strategies, and then go back, of course, to the team, and we'd structure stuff for them. Everything from kind of boring vanilla bonds right through to some fairly complex structured investments with a whole range of different exposures. And so, I guess my world was very much focused on value even back then. You want to put a dollar into something and get $2 out. Well, what actually needs to happen in between for you to get the outcome you want? And I guess one of the things was with all that was that I realized how little most people know about this stuff, particularly business owners. Business owners are focused on their business and their little world, and they're experts in that world. But what do they do with money once they've actually achieved some success was often a big problem. So translate a lot of that. We ended up developing a business that helps business owners understand how to build value in their company, in their largest asset, and really how to think about what to do with that as they approach an eventual exit.
So along those lines, as business owners become successful and start experiencing profitability, right? We explore what they do with it. So curious,
Yeah.
from your perspective, what did you do with your profitability when you first came into it? What do you do now, and kind of what's changed?
Yeah, I think it, the reality is that it's an evolving story for myself personally, and I can talk a little bit about that and how it influences or has changed how we talk to our clients now. I think, like a lot of people, when I started my career, and I was in my 20s, and I started achieving some success and was quite probably a different mold to a lot of my family traditionally. A lot of my family weren't really didn't go on and have university degrees and didn't do a lot of the stuff that I did. And I think as a young guy, you start running around and investing, and you're kind of very much tolerant of risk and all this sort of stuff. And I certainly was nowhere near as planned back then as what I would be suggesting to my clients now. And I think it actually does translate really well to a lot of business owners, because so many business owners start their company because they're good at something, and they don't necessarily think, oh, well, one day I'm going to be worth 10, 20, 30, 50, $100 million, right? So they just happen to be good at what they're doing, and then success starts to come, and they start putting money in places, because they're probably told they should, but there's not necessarily an overarching plan to it. And so, yeah, I guess that's the part that I'm advocating, and obviously happy to unpack all that.
Yeah. So what's it sounds like early it was more lifestyle, more driven by, the competing demands around you.
Yeah,
As you're now and you're more structured, like what's the framework that you think about things now in terms of,
yeah.
I'm intrigued what you would do with, you and your company, and then, advice that you give to your clients as well.
Yeah, cool. So I think, yeah, to your point, I mean, when I was younger, I think a lot of stuff is reactive, right? You see an opportunity and let's jump on this and let's do that. And yeah, you're going with sort of a lot of instinct and of course your own knowledge and education. But I guess where I really differ these days, and certainly what I advocate to my clients, is you really need to be thinking about what's important to you. When I say important to you, I mean you as the individual, as the person, not the CEO, not the profile that the public looks at and sees, and that your employees probably even engage with. Really, really at your core, what's important to you as a human. How do you want to live your life? How do you want to invest or utilize your most important resource, which is actually your time, right? You start to make significant money in life. After all, money stops being a concern, right? Like you're not actually worried anymore about paying your bills and, can I have that little holiday or upgrade my car? That sort of stuff just comes. So your time and your impact start to be far more significant in terms of importance. And so I guess I talk to a lot of my clients about, well, what's your ideal kind of scenario? Do you love what you do? Do you love working? If so, even within that, how much time do you want to spend on that, and what kind of tasks do you want to be doing? Do you want to keep doing that indefinitely? Is there a line in the sand where you're saying, well, actually, I kind of want to move on and do other things. I believe I can have impact in other ways. Hey, maybe you just want to go fishing. But I think everybody needs to get to the core of what they want. And I think, we've all heard of Maslow's hierarchy of needs, right? And I think that does play a little part because, and I'll share my own perspective on this, is that, when I talk to my wife about what's important, the most fundamental thing is, of course, that you can provide for your family, right? Shelter and food and all the basics, but then quality of life becomes the next most important thing. And, for us, we often talk about building businesses that can run without us, not just because it makes them highly saleable, but because they, you've got passive income and, the ability to, what I call kind of freedom is the ability to do what you want when you want, right? I want to go and jump on a plane and come and visit you in Seattle. Well, I'd like to be able to have that option to be able to do that. And look, everybody has their own motivators, right? Like I'm not the, go and buy a Ferrari kind of guy. I'm not motivated by that. But experiences for me are really, really important. And, I've got two boys, they're 12 and 14. So they're really at that impressionable age. And I'm constantly trying to do cool things with them that A, makes them want to hang out with me more, but B, hopefully build some kind of a framework, a habit where as they start to get a bit older, they'll still be able to tap back into that with me when they develop their own lives and get married and have kids and get busy. So, at the moment I'm trying to teach them how to play golf. I'm like, well, if I can get them into this, they'll keep playing with me when they get older, so maybe a little bit selfish there, but I'm going to try and capture as much of their time as I can. So I think it's establishing some of those core, really, really deep intrinsic personal things first. And then once you've nailed down some of that stuff, then you can start looking at, well, what are the other types of things we want to do, whether that's impact and legacy issues or, whatever it might be. But of course, having that discussion allows you to start putting a framework around, well, how much money do we actually need for all this stuff, right? I'll give you a little example of that. I had a client who we were sitting down, we were talking about his business and stuff like that. And I asked him, did he know how much money he needed? Like, do you know your number? And he said, oh yeah, I know my number. And I'll just, for the example, it was 5 mil. And I said, okay, so why 5 mil? And when I asked him this, it was the response that I get from most people. It was basically back of the envelope, back of the brain. He'd kind of done a couple of quick numbers in his head and gone, well, I think I need 5 million to live. And I just sort of stressed to him that it would be worth testing that out a little bit, like being a little bit more rigorous in his considerations, and maybe even speaking to a financial planner about what he needs for his life to make everything work. And he actually, because at the end of the day, for me to get his business from where it was, which I at the time thought it was probably worth about $1 million, I said, for me to get you from $1 million to 5 million could take a lot of effort, time, energy, money. This is not going to be an easy road. We've got to climb the mountain. And of course, that's quite daunting for a lot of business owners too, right? So I said, go and stress test that number a little bit. And here's some things to consider. And then let's catch up again in a few weeks' time. Now, the interesting part was we caught up again, and he came back and he goes, I'm really glad I did that activity, because I've worked out that whilst 5 million would be really, really nice, I probably only need 3.5. We own our home. We've got a couple of things. I don't need as much money as I thought I did, and therefore maybe I don't have to hang around as long or work as hard. And so even though he was talking about potentially having less money, he was actually a lot happier. Like, you could actually see this sense of freedom about him that I think a lot of business owners struggle with. So yeah, I just think the overarching message, and clearly I've been talking a lot here, but the overarching message here is try to have a bit of thought, or put a bit of thought around your plan and what's important to you as the human behind all this business and money, because that's actually the most important thing you can possibly consider.
It's interesting. So you're using essentially the exit, right, or the that conversation about where they want to be to back into values and mission and vision, which then helps you inform, okay, how do I really need to set it up? How many of those business owners that you're talking with kind of are able to grasp that and really get down to the root? Or is it one where you've got a suite of partners and you recommend, said coach to help them on that journey?
Yeah, look, that's a great question too. I think when you talk about this sort of stuff initially, I think most people will kind of nod and get it. Yeah, okay, yeah, that makes sense. We should reverse engineer this like we do any goal in our business. But I think unless you give people a framework and a model to follow, that's where the thinking will end. Because they go back into what I generically call the bowl of spaghetti, which is family, business, life, all this stuff, like this big bowl of mixed up things there. We end up going round and round in circles, right? And I think this is the conundrum of life and business. Most business owners see their business and they'll see certain issues or problems, and they'll pull a lever to fix one problem, and they might solve that problem, but because they pulled this lever, 3 other problems popped up. And you overlay the complexity of some of the family dynamics and some of the, complex emotional stuff that happens in business, and particularly family business. And you actually get business owners running around in circles trying to find solutions and not really knowing how to do that. So to answer your question, we've got a quite a distinct process that we take people through. It's not overly heavy and arduous, but it really defines some of the core criteria. And I'll give your audience 3 things to think about in this that they can take away. But it addresses their financial needs, like what's the number that you need? And we've actually got a process for people can answer questions about themselves and their life and kind of fundamentally work out a big picture budget, right? So what do you need the number to be? What sort of timing are you talking about? So, how long do you want to keep doing what you're doing? How much runway have we got to build value if you're not at your number already? And by the way, I've had plenty of clients do this and go, wow, I had no idea, but I've worked out my number and our valuation's already over that. And you see them go through this shift of, I actually don't have to keep doing what I'm doing. Like, I could literally sell my business today and stop. And so perhaps it throws them in the deep end of the pool with some other key questions there. But it is fantastic to see people's eyes open to the fact that they've got options and choices, right? So what's your number? What sort of time are you playing with? And time is a funny one because it's how long do you want to keep doing what you're doing, but how long do you want to keep owning this asset? And I want to come back to that one because, we're having a discussion around investments and then there's an important key around that. And the third element or leg of this stool is what I loosely call legacy. And I think if you go back 50 years, legacy to a business owner was, do I have my name on the door? Bedard and Associates. Oh my goodness, if I sell my company, they're going to be out trading on my name. And how do I feel about that? And what happens if they do something that I don't like? And I think that kind of legacy has mostly shifted or gone away. I mean, there's still a few companies out there who put their name on the door, but I kind of liken legacy more to what do people say and think about you when you leave the room? And to that end, it's like employees, customers, suppliers, all these people that you've had key relationships with over the years. Now, don't get me wrong, I have business owners who say, legacy is not important to me. I think I've been a good guy. I've been a great boss. I pay people not just fairly, but generously. I treat people with respect. I don't owe anybody anything. I've done my bit. And so they can kind of put that issue to bed quite comfortably, feeling like I can sell my company and do what I want. I've got other owners, and I had one client who took the lowest of 3 offers because he felt that buyer respected his business more, respected the business model and the history and where they'd come from. And he felt that they would honor that and build the business in the way that he wanted to see it built. And a big part of that was their plan for the employees and how they would be looked after. And this guy said, I'd much rather take a bit of less money and sleep at night. And so for him, legacy was actually the most important issue. So thinking about those 3 things, it can be quite challenging. But I think if you ask yourself the right questions, you may be surprised with what answers come up. Now, I said I'd come back on the timeline aspect to it. How long do you want to keep doing what you're doing, and how long do you want to own this asset? One of the things about owning the asset after you've stepped out of the business, right? So exit means different things to different people, right? You might sell your business. You might want to step back from the day-to-day management and put a team in place. And maybe you're the chairman for a while, and maybe even step out of that after a while. And I think that can be quite an appealing idea for some business owners, particularly if they may be struggling with the idea of letting go. The other aspect to it is I've had a lot of accountants saying to our mutual client, you're crazy, don't sell this business. It's a cash cow. This thing will just make you money forever. Why wouldn't you want the income? And that's a good thing to be, you've got to be questioning that, right? But I guess to that end, I'd just be saying, you may have a deep emotional connection to your company and you may feel very, very strongly about it, but you do need to kind of get back up to 40,000 feet, and you need to be able to look at your business like any other asset in your portfolio, right? We do need to be able to sometimes put down the emotion and say, well, as a family unit, where does this asset sit in our total portfolio? And for one of my clients, their business represented something like 75 to 80% of their entire wealth, and which clearly is a huge amount, right? And so the conversation became, okay, like that's great. Like you want to hang on to this company. It's a great company. You've built a fabulous business. But number one, you're going to now start entrusting other people to manage this asset for you. How confident are you to hand them fundamentally the keys to your kingdom and say, I'm just going to go over here now? I don't think most people, certainly entrepreneurs who've built big businesses, they usually got their hand on the controls fairly tightly, right? So number one, relying on other people who may or may not be equipped with the right skills to manage that asset is one thing. And two, I mean, look, any investment advisor straight out of their first semester at university would tell you diversification is actually a key risk management, approach, right? So, having 80% of your wealth, or quite frankly, having 50% of your wealth in any asset would be ludicrous, and nobody in their right mind would or should be doing that. So, so there are some fundamental issues there that people need to unpack.
Yeah, and just the journey that you take them on, right? In terms of understanding those key value criteria and how you position them in the sale and trying to find the right buyer. Like there's a lot of different complexities that go into that. Um, as you're talking to people who have come to you, let's say they're a little more planful and the exit's a little further out, and they've got profitability to invest, what are you seeing as, your top recommendation that you're giving these guys, right? Is it, hey, take it out because you need to diversify, right? And plan that way? Is it, hey, you need to invest in XYZ to shore up for the sale or develop, something else
Yeah.
that makes you more attractive? Kind of what are you seeing as the common theme there?
Yeah, another great question. And I think the reality is that the answer is kind of all of the above. It really depends on the situation. I think from a fundamentals perspective, if you've got a lot of surplus cash, and you can take that out of the business and invest it in other areas for diversification, that is a fundamental principle that I think makes a lot of sense. However, certain situations, I mean, you may well be doubling down on a particular strategy in the business to get it to that next level or position it for an extraordinary exit. And so I think ultimately those kind of strategic decisions need to be weighed on their merits, as to whether or not it's worth taking that kind of risk. Um, for example, I've got a client at the moment they're a SaaS business. They have had a couple of years that they've pretty much not been profitable because they completely reinvested to get their revenues to a certain level where we just knew they would be now of great interest to a particular buyer. We just know those buyers, they don't buy companies below certain levels. But once you get to that certain level, the multiple and the rewards are huge. So there was an ability to sort of look at the various risks in a scenario like that and make an assessment on it. But if you don't have the data and you don't have enough information around it to really assess that risk, then you really should be questioning whether you should go down that path. And of course, the other thing too, Liam, is personality plays a lot in this. I like personality types. And, I think I've had lots of clients over the years, and I talk to lots of people on our podcast about, their approach and what they've done. And some people are just so darn passionate about their business, like that's all they want to do. And so they just keep pouring more and back in and back in and back in. And look, let's be honest, some people have done that and been hugely successful. I just think, though, that there's a lot of risk that comes with that, right? And once again, I think if most people sit down with the loved ones in their family and work out what's important to them, they start going, well, is it really important that I get the business to that next level, or actually, are we actually doing some really good work and already having a great impact? And once again, ask those intrinsic questions, right?
How do you coach people, or maybe it's not part of your practice, but I'm sure you've gone through it in terms of diversifying along the way, right? So as you're becoming profitable, you've got cash, right? In an ideal world, you're building passive income, right? Reducing the amount of stress you're putting on any one asset to deliver.
Yep.
What are those places that you've looked to, or have invested that make sense, or you see a lot of your clients putting their money?
Yeah. And look, I think ultimately it's fairly broad. I mean, Australia, there's a great passion and love for property investing in Australia. It is a big driver of our economy. So what I tend to find is that even before people necessarily got great professional financial advice, a lot of people are just naturally starting to invest in property already. So I think that tends to, our culture in Australia is very swayed to that. But look, I think once again, I mean, well, actually, let me answer your question in a slightly different way. We're seeing a huge number of buyers coming to us at the moment, a lot of very professional investors, some with private equity and whatever, but it's the same philosophy, is that a lot of these people have quite a diversified portfolio already. They have international and Australian equities. They have an interesting property portfolio. They might even have some alternative sort of assets. Maybe they've invested in some infrastructure and some different things, perhaps some cash, perhaps some bonds, perhaps some other kind of structured stuff. So they can sit there and say, well, look, we're actually quite well diversified, but we're still generating a lot of cash here. What do we do with this cash? Because we can't leave it in the bank. It's we're at negative interest rates in some environments, so it's we've got to do something with that. And I think certainly since COVID started, and we saw a bit of the entire world was kind of jolted into a different kind of way of thinking about things. We've seen a lot of investors reassessing what they're doing with that spare cash. And we've seen a huge uptick in the level of buyers in the market looking to invest in other businesses. You know, if you're a set of investors who, you know, you've got, as I say, quite a diversified portfolio already, if you can buy into a business that you fundamentally understand and you can understand the risk behind that business and you can get a 20 to 30% return on your money, that's quite attractive compared to leaving it in the bank or perhaps some of the other more conservative style investments, right? Now, we all know the higher the risk, the higher the return, right? But so they need to be comfortable with that kind of risk. But I certainly find that entrepreneurs that we deal with, they're used to business and operational risk. So, you know, if they can see a business and they just get it, for them, the perceived risk of that business might be much lower than perhaps somebody who's not as familiar as that model. Which, you know, the analogy for that, of course, is pilots, right? I always like, if you're absolutely petrified of flying, you know, it doesn't matter what I or anyone else or even that pilot over there tells you about flying, you're going to see the risk of flying as being huge. Now, the risk doesn't change between you and the pilot of that plane. You're on the same plane exposed to the same risk. It's just perception of risk, right? So, so that's what we're seeing a lot of at the moment.
Appreciate that insight. As we're wrapping up here, if there was one thing that you would share with, you know, an entrepreneur who's going through that, they're in the profitability stage, right? Maybe they're thinking about the exit. What would you tell them? Like, hey, start here, focus on this one thing.
Yeah, look, I think it comes back to what we were talking about before, is those sort of deep intrinsic personal things. You know, if you're married, if you've got kids, you know, who are the significant others in your family? Take the time to talk to them in an environment where you're not under pressure. So, you know, I'm always saying to my clients, don't wait until we've sold the business and you've got a whack of cash in the account to start getting advice on this stuff and thinking about it. Because quite frankly, and hopefully this doesn't happen, but quite often that's when the vultures are all circling. You know, everybody wants to strike and all the latest whiz-bang investor guy wants to, you know, talk to people, build relationships with people, build your trusted advisors well before you have this windfall. And that way you can, you know, when it comes time to making some serious decisions, you'll feel a lot calmer because you've addressed a lot of the issues. You feel like you'll have a good handle on all the stakeholders. You've probably even mapped out a little bit of a plan. You can just take a better approach to it. Because let's be honest, like, pressure is what actually causes most people to make the wrong decision. And a lot of that just comes down to not planning well enough.
Appreciate you sharing your perspective today, Simon. What's the best way for the audience to connect back with you?
Look, I'd say probably LinkedIn. LinkedIn's great. Ping me a connection request on LinkedIn, or, you know, hit follow. I'm always happy to connect with people. But please, if you do send me a connection request, just put a little message in there. It doesn't have to be a big, long-winded thing, but just put a little note in there telling them that you heard me being interviewed by Liam on this podcast. And then I kind of know some context of where you're coming from, and I'll be very happy to connect with you. So, of course, if anyone wants to see what we do, I mean, exitadvisory.com.au is our website. By all means, go check that out if you want to. But hey, ping me a note on LinkedIn. Always happy to chat.
Appreciate the time today, Simon. Thanks.
Pleasure, Liam. Thanks for having me on the show.